What up, what up? Let you guys know what I'm listening to here. Little hot joint. Got an aggressive setup here, guys. Just wanted to show you guys I'm working on a new system. Working on a new system indicator. Might turn into an automated program. Let me just show you guys really quick. Alright, this is Euro USD cross right here. We're currently at 272. Last night, my notes, I called a short at 318, 11:57 p.m., which is when the indicator said go south. We're at 272 right now. So we're taking a little over 30 pips. Now, this setup, guys, for the weekend, as you can see, let me find my cursor. Okay, guys, right here, this particular bump, this candle, was actually because of the Fed announcement, of course. If you guys can hear me well, please heart it up. Don't be afraid to share, guys. Thank you very much. Thank you for the hearts. Appreciate that. Sharing is caring, and the more shares I get, the more I will share with you guys. Fred, what's up? So you can see this huge candle coming off of the Fed announcement. Alright, Fed has now become dovish. 3 weeks ago, Fed was... Del, thank you for the invite. 3 weeks ago, Fed was actually saying, hey, everything's looking great. Guys, this isn't good in terms of the overall market. For the long term, it's obviously great for volatility. In the short term, the Fed is creating volatility with many of the currency crosses, and what they are going to be doing coming up is very likely to either backpedal down their rate to match the other currencies that are devaluing, or they will keep rates where they are. They would have to be a bit insane to keep raising rates, because in essence what they're going to do is kill US exports. They're going to further decline the economy at a very quick rate, and as a matter of fact, it would be the exact opposite of what Volcker was trying to do. Volcker had inflation to rein in. This Fed has inflation to create, and they are not able to create it, which is of course not a good thing. So where does this leave us? Well, we see, look at how every single central bank, all right, this China right here, guys, these central banks are now creating more volatility and opportunity than ever in history. All right, these large candles, and you see how there's almost no movement. If we go look at from here to here, okay, we're at 56 to 83. We have 130 pips of total movement over the course of a week. Now think about that. What does that tell you as a trader? That all of the volatility is being created based upon central banks and their policies. No volatility is being created with normal trading. LeBoy, if you're taking it into consideration, that's a great thing. Make sure you get educated, because it's a double-edged sword. So guys, the play that I am calling here, and you can see even as I'm talking, we're up another 7 pips on this short position, even as I'm talking right now. Last night, 11:57 p.m., I'm 35. Last night, 11:57 p.m., our trading system indicated to take a short position. Now, here's the play, guys. The play for the weekend is this. If you're an aggressive player, you go short with a stop at the top of this candle right here. Okay, we're going to expect that there might be a retracement, but if there is a retracement, we want to cap the loss, make sure that it does not lose. The long term, though, this is a 4-hour chart, by the way. Okay, 4-hour chart we're looking at. The long term is this, guys. The euro is looking weak. Okay, we're going to start reining in a lot of the volatility that was created, and the winners are going to start selling their positions and taking profits. and this is naturally going to create a slump in the euro. Okay, now the aggressive play for the weekend, as I said, is short with a stop at the top of this candle. Okay, we have a lot of price crossing this area. You could do fib retracements from the top of this candle to here. You could do a bunch of things from here to here. It depends on what your capabilities are, where you're located. So I'm going to hold off on recommending a broker. I don't know if you're in the US or if you're international. I'm only familiar with US brokers, and I personally use TD Ameritrade right now. Okay. TD Ameritrade has the most robust trading platform, in my opinion, especially if you're going to be doing both options and Forex, as I do. In terms of options trading, TD Ameritrade has the best retail platform by far. If you don't know how to use it, though, that's an entirely different story. TD Ameritrade. It's actually Thinkorswim. You can go through the Thinkorswim platform. So just look up Thinkorswim, and TD Ameritrade acquired Thinkorswim. So it's the same now. But the point is that we're taking a short position. If you're an aggressive trader, we're looking to hit this level, okay, at 218, because we have a lot of price aggregation here. You can see going back, we hit a ceiling here. We hit a ceiling here. We went through the ceiling. Now we're expecting a lot of players to come in around this point. They may pop the price back up and then have it continue down, because the volatility that was created by the Fed will likely not last long. So guys, that is the play for this weekend. If you're aggressive, make sure you put your stop loss in and do not take the position for granted. Pay attention to it. Wake up early. Watch it Sunday night. Okay, Sunday night as the markets open and currencies start trading again. You're going to want to keep an eye on it. And then wake up early Monday morning, because players will likely be coming in early in the morning, selling and taking profits on those positions. All right? So guys, follow along. Invite some people. I appreciate you watching. You guys can catch me on all my social networks, Fit Businessman. We're going to talk a little bit more about currencies. We're going to talk about aligning yourself for wealth building using Forex and currency markets. And that's what we're going to be talking about for the next month. I'm going to really focus on. Do I have an Instagram? Yes, Fit Businessman is my Instagram. It's the same handle. Thank you, Richard. It's the same handle as my Periscope, same handle as my Snapchat. Fit Businessman, one word. So, guys, again, just to recap for all you replayers, if you're catching this on the fly right now, no problem. No problem, boy. We're going short Euro USD. Target is around 225, so possibly lower. You know, we may get down to 205-ish, 200 flat if it really takes wings, and a lot of people are taking their profits from that volatility that the Fed created. And if it doesn't reach that point, though, if it does reach that point, I expect a rebound. If it doesn't reach that point, I expect it to go further at some point. No problem, no problem. Yes. Now, be sure that you know that this type of thing, Forex is not really considered investing. It's considered more speculation. And speculation has a little bit different take. It's much shorter term. It's much more liquid. It's a much different strategy. Mason, what's up? So that's what we're looking at, guys. If you guys have any questions, reach out to me. Snap me on Snapchat, and also you can be sure to catch me on Instagram. You can DM me on Instagram, Fit Businessman. I will catch you guys on Monday. Have a great weekend.